Hi, I am Anna. I come from www.ntvforex.com. Market turning points. http ntvforex.com News ID 2E9D04 7/20/2012 10:27 am. Current position of the market. SPX long-term trend. For now, the best guesstimate is that we are still in the bull market which started in 2009. SPX intermediate trend. We should be approaching an important high, with confirmation coming over the next few days. Analysis of the short-term trend is done daily with the help of hourly charts. It is an important adjunct to the analysis of daily and weekly charts which discuss longer market trends. Time for caution. Long-term. With the degree of recovery that SPX has made from the March low, it is likely that the 2192 was only wave 4 of the bull market which started in 2009. Important cycles. 36 TD cycle 709. The 40 WK cycle 720 is apparently inverting 45 TD cycle 814. Market analysis charts courtesy of Q Charts. SPX IWM weekly charts. Next week could be a transition point for the stock market because many of the programs which have sustained workers, small businesses, and renters will soon end. Congress is still not unified on replacing them. The 40 WK cycle is peaking instead of making a low and about to reverse. The NDX, which has sustained the advance in SPX, may already have peaked at 269. Stock Charts has a bearish PAMP-F projection for QQQ 259 to 236. This matches a 0.382 retracement from the March low to 230. Next week could be a reality check for the stock market which, since its March low, has been unconcerned with the economic uncertainties that lie ahead. Last week SPX pierced through its former rally high by a fraction. The momentum could carry it slightly higher next week. If this is all it does before reversing sharply, it will most likely be a sign that the rally has come to an end and that we have started a correction. Tran is still lagging. SPX daily chart. On Monday of last week, SPX overcame its June high by 2 points and was immediately shoved back over 100 points. It tried again on Wednesday and managed to add another 3 points, but could go no higher and fell back. Friday, SPX saw a crawling rally which reached 3,233, but could not close on its high. It is clear that the former high is being defended by sellers, but hope that something positive could come over the weekend kept prices near their highs. Next week will be a very important time slot for the stock market because of the reasons stated above. I should point out that the momentum oscillators are overbought and showing deceleration, but do not show the negative divergence which is normally a prerequisite for a reversal. Only the ADS have been showing divergence for the past 2 weeks. Nevertheless, the index is in need of a positive catalyst to keep it going higher. If that does not come, we could see the beginning of a correction of the uptrend which started in March. If, as claimed by Haddock, that the 40 WK cycle is making a high instead of a low, something which is obvious enough by now, the odds favor a downward path once it has peaked. Up to this point, all short-term PAMP-F projections except for the 3,230 target which brought about a 108-point reversal and has yet to be exceeded have only had a minimal impact on prices. The next level to watch is 3,250-3,260. SPX hourly chart. Since Monday's reversal from the 3,230 PAMP-F target, followed by a rally back to that level, the index has done little, perhaps waiting for more vaccine successes or another relief bill from Congress. The oscillators are on hold as well, with negative divergence in both momentum and breadth. There is not much more that can be said beyond what was said above, and we must wait for a resolution to the current market condition. The projection to 3,250-60 could buy us a little more time, but the immediate path of the market will be determined by the action of the NDX, which appears to have topped for now and is in the process of creating a congestion pattern. Ever since mid-April, SPX has bounced off its 200 HR MA 6 times. The MA is currently at 3,114, which is also an important support level. Dropping below it would signal the start of a correction. UUP Dollar ETF. It does not look as if the 3MO cycle has been able to support UUP. There could still be hesitation at this level, but new lows are likely. USD, which is trading at 95.86, has a short-term projection to 94.93. GDX Gold Miners. GDX has a near-term projection of 40. If correct, reaching that price would lead to a reversal and correction, but since there are much higher eventual projections, it should be limited in time. POS Pan American Silver Corp. POS should get to 35 before reversing and consolidating in conjunction with GDX. BNO US Brent Oil Fund. BNO is ready to pull back along with the market. It needs to retest its low and create a base. Summary. SPX shares some of the high-tech stocks with NDX and QQQ. The latter has been the primary engine propelling SPX to its current level. So, purely on a technical basis, if QQQ has already made an intermediate high, it stands to reason that SPX will shortly follow suit. StockCharts has a bearish projection of 236 for QQQ in the coming correction. Based on Friday's close, I can project 233 if QQQ resumes its correction without making some additional congestion at this level. Subscribe our channel to receive the news as soon as possible. Thank you for watching.